should Indian investors and Indians in general be worried about this AI bubble?
Any correction there is going to hit everyone irrespective of who and where they are.
Right.
Now look at what's happening with FPIs. If the US goes risk off, what happens? EM outflows will come. If EM outflows come, there is rupee pressure. If rupee pressure is there is imported inflation. When this happens, there is going to be a hyperscaler capex freeze because they are now doing it through debt. If hyperscalers freeze capex, what's immediately going to happen? There will be a GCC hiring freeze here. If GCC hiring freeze, what's going to happen to a Bangalore or a NCR market? What's going to happen in the office space there? What impact is it going to have on consumption?
Hello and welcome to Macro Decode. Fears about the AI bubble in the US markets have intensified in recent times, especially after the correction in the South Korean stock market and the sharp fall in SpaceX shares. Recently, the RBI Governor also remarked that a potential sharp correction in AI-driven global tech equities could easily spill over to Indian markets. AI giants like OpenAI and Anthropic are also heading towards IPO. In this context, let's talk to Vineet Vijayaraghavan to find out why should Indian investors and the Indian economy in general be worried about AI bubble. Mr. Vijayaraghavan has worked with private equity investors as a limited partner and also has been closely working with AI startups. Welcome to the show, Vineet.
Thank you, Sangeeta.
So everyone is talking about the AI bubble, and now with both the RBI Governor and even Chief Economic Advisor raising concerns, the issue has come much closer home. So tell me, why are we referring to the investments that have been going into AI startups as a bubble? Is there a disconnect between the earnings and the valuations of these companies?
So just to give you context, Sangeeta, right? OpenAI is being valued currently at about 40 times sales, right? Doing about $20 billion in revenue. Look at Anthropic, for example, again being valued at about 20 times sales. And neither of them have made any money so far, right? They're not profitable, right? And it is estimated OpenAI is actually going to lose anywhere between $15 to $20 billion this year alone.
Okay.
Right? Now contrast this and see what's happening, right? Hyperscalers, your Amazons or Googles, etc., they have committed and they're investing about $750 billion in capex in this year alone. That's about 35% increase in capex. Now, if you look at that, about 800 billion of that demand is circular. I think that's where things get very interesting, right? So one such circular loop, for example, is Nvidia to OpenAI to Oracle back to Nvidia. So demand is becoming circular in nature for that kind of capex that's being spent. For a moment now, cut back, right? Look at TCS as an example. TCS, if I'm looking at it correctly, is trading somewhere around 25 times earnings. And that's a company with profits. And AI labs are trading at 40 times sales with losses. Just compare and contrast this and clearly you will see what's happening. Look at the data for the startup funding, right? The entire Indian AI startup funding, entire funding in 2025 last year at about $650 million is still 1% of one single round of a $65 billion raised by Anthropic. So there's absolutely no comparison between what's happening. The real point there is how valuations are ahead of capital raise and not really earnings, right? I think that's where people are getting this fear about bubble, but there is a lot more nuances to it.
So do you think this is an AI bubble?
Is it an AI bubble in terms of timing? Likely yes. Where the bubble is, it's not all over. So there could be bubble in certain pockets. How this might play out, will the bubble burst, will the bubble get pricked? What will happen? I think time will tell.
But then we have also seen South Korea's stock market crashing and SpaceX shares coming down. What does it actually tell about the whole thing that is happening around?
What certainly I think there is overestimation of revenue in terms of timing. Is that overestimation in terms of direction? I don't think so. Are people overestimating directionally? No. But are they overestimating on timing? Absolutely yes. Let's look at some numbers. There is about $750 billion of capex, like we talked about earlier, hyperscaler capex. That's chasing model revenue, and that model revenue is hardly $70 billion in 2026. So there's $750 billion chasing about $70 billion of revenue in 2026. At TCS, they have cut about 23,400 jobs in an AI first pivot, and they are betting that AI revenues will arrive faster than it will. And is there a direction to say that yes, Anthropic went from $10 billion to $47 billion run rate in about 18 months. So the revenue is real.
Right.
It's just concentrated in a few firms. Downstream, everybody is still burning a lot of money. That's the truth.
Okay. But if you look at every transformative technology, it has gone through a phase of excessive optimism. How do we distinguish between genuine innovation and speculative frenzy?
right? One rule of thumb I've been using since .com is follow who pays for the capex. That's the first step. Once you start following that, it gets very interesting. You start seeing where the operation cash flows are. Those with operation cash flows are certainly innovating. Where debt is going, where all kinds of other interesting things are going, there is certainly frenzy. Where there is circular revenue building up, I think there is frenzy, right? So here there is some interesting nuances. Hyperscaler build out 24-25 is predominantly cash funded by their profitability,
Okay.
right? 26 something dramatically has shifted. Look at what's happening with Meta, what's happening with Oracle. All of these people are issuing longer tenor debt, right? And I think the point you brought about, I think this is actually something that even RBI's FSR has flagged directly about this point, right? To me, these kinds of markers start to become frenzy markers, right? There is about 16 gigawatts of data center plant. Only about 5 gigawatts is under construction, right? There is about 50% to 70% expected delays. There is grid cube for about 4 to 7 years. Energy constraints may be one thing that might actually prevent a .com style overbuild up and bubble bursting. You can't overbuild what you really cannot provide energy for. Where can I build if I can't give energy to it? The second thing that you asked about frenzy, one more rule of thumb I follow. Are you getting revenue from real customers? Right? And if you're getting revenue from your own investors where all the circular game is happening, I'm quite skeptical of that innovation and adoption.
Right.
Right?
When we talk about AI bubble, naturally the comparison goes to .com boom and bust. What are the major similarities and the differences between the AI bubble and the .com boom and bust?
There are 3 or 4 key similarities I have kind of identified from my experience. In .com, there was a concentration in the Nasdaq. Similarly, now in S&P itself, there is concentration, especially with Max 7, now with Max 7 plus semi. The concentration is worse than what it was in 2000. There is no doubt about it.
Okay.
What's also similar, think about the vendor financing thing that's happening, right? What's happening with Nvidia funding customers is exactly the loosened now playbook of the .com era, right? Exactly same. There's absolutely no difference.
Okay.
Nvidia funding customers is the old playbook. Also, the IPO rush, peak private valuations and peak private markets. I think that's what's triggering everybody to even talk about it. There are some very important differences, right? If you look at Nvidia is somewhere between 38 to 45 times forward earnings.
Okay.
If you recollect, I think if I remember correctly, Cisco was north of 100 times.
Okay.
Right? So Nvidia is nowhere close to that, right?
Okay. Right.
Look at the other difference, right? Nvidia generates about $25 billion of cash in a quarter. At best Cisco did $1 billion.
Yeah.
The key difference is in the fiber. Dark fiber is relatively cheap to overbuild. Gigawatts is not really cheap to overbuild, right? So I think that's a very big difference.
When we talk about Anthropic and OpenAI, experts have been warning that early investors who have invested in these companies would probably dump their share on the retail investors, and this could probably lead to a massive correction. Is that possible? And if you look at the fall of SpaceX valuation, what does it actually tell us?
Look at SpaceX, no? I mean, the market is telling us something very clearly, right? It was priced at what, $135 if I remember correctly, right? Peaked at about, I think, what, $225 maybe in about 4 or 5 days. I think 60-70% above it went. And then it's fallen back about 35% from there. So literally the average post IPO buyer today is likely only at break even, if not losing little money.
Okay.
Right? So that's the template. I mean, there is no doubt about it, right? When private markets come to meet a public price discovery, it's a very quick hype and then the discovery brings it back lightly to where it should be, right? OpenAI is talking about $1 trillion listing. Anthropic is, I think, 960 or something $billion, right?
Okay.
So retail has to be highly careful if they are going to play this at this point. And it is by design that they are forced to enter at the highest price in the company's history. So my suggestion is that I would wait at least for all these lock-ins to be ending before making a decision.
Do you think by the time they go into IPO, the valuations will peak and then they will start that correction? Is that going to happen?
See, you are putting me on a speculative path, but where irrespective of what I say, I'm going to be wrong, right? Nevertheless, just to humor myself and humor you, I think they will be richly valued. I don't think they're going to be cheap when they're IPOing. Can they go higher further? Absolutely. SpaceX showed that in 4 days they can go up 60%, right? So can they go up higher? Yes. Will they likely also come back to center of gravity? Very likely, yes.
RBI had warned that inflated AI stock valuations and potential correction could pose a risk to financial stability and economy in general. How could it affect Indian stock markets and the Indian economy at large? Why should Indian investors and Indians in general be worried about this AI bubble?
So I think broadly first look at what's happening in the US equities. No, the foreign holdings in US equities was somewhere around 7.5 trillion in 2020, right, during the COVID times.
Right.
Right. From there, it's gone up to about 21 trillion as of this year.
Okay.
Which means any correction there is going to hit everyone, irrespective of who and where they are.
Right.
Now look at what's happening with FPIs. They are kind of taken out maybe about 2.5 lakh crores from India in the in current year alone.
Okay.
One obvious second order effect is if the US goes risk off, what happens? Clearly EM outflows will come. If EM outflows come, there is rupee pressure. If rupee pressure is there, there is imported inflation. Now think about a third order effect. Right? I'll give you one example of a third order. When this happens, there is going to be a hyperscaler capex freeze because they are now doing it through debt.
That's right.
If hyperscalers freeze capex, what's immediately going to happen? There will be a GCC hiring freeze here, and I think we are already seeing IT hiring and GCC hiring freeze in India already going on. If GCC hiring freeze, think about what's going to happen to a Bangalore or a NCR market or a Gurgaon market where IT is so prevalent, or take Hyderabad for example. What's going to happen in those markets? What's going to happen in the office space there? What's it going to have? What impact is it going to have on consumption? Right? Today, for the first time in so many years, IT salaries have gone down for a lot of people. No, the fresher salary has gone down from about 3.5 lakhs to 2.4 lakhs this year. So, it's already starting to hit somewhere, right? And keep in mind, we are talking about 6 million IT workforce, right? And the top 5 firms have a net cut jobs of 6,900 in this year, right? And this is the first reversal in many, many years. Look at fresher intake, they are multi-year lows, right? 2024 graduates still about, a lot of them are still unplaced. Now think about what Indian banks exposure can be indirectly via private credit. I think that is something I'm sure RBI will be watching. Where did this trigger start? It came from Accenture's guidance, because if you remember that one day that Accenture's guidance was cut, right? That day, 1.5 crore of IT market cap was erased in that one session, if I remember correctly.
India has a very negligible role to play in AI game as of now, but can a correction in the global market be good for tech stock? We will have a lot of repercussions in the Indian market, stock markets, in the economy, but later on, will the Indian tech stocks gain from this kind of a bubble and a burst?
I've been asked the same thing by a bunch of public market investors why certain mutual funds known for certain types of investing are starting to accumulate a lot of IT stocks in this environment. The Indian Nifty IT is down 40% from its peak. 2 years ago, TCS was 16 lakh crore market cap. Today, I think cumulatively TCS plus Infosys plus HCL plus Wipro plus Tech Mahindra is about 18 lakh crores. All of them are put together within 5% of Reliance's as a single entity. If a correction happens, what will happen? Our compute cost, our input cost will completely go down.
Okay.
Right? Our compute cost will go down, GPU cost will go down, talent will go down, everything will go down. And it will lead to cheaper intelligence for sure. Right? What does cheaper intelligence mean? Certainly more work. But will that happen in 2 years, 3 years? I don't know. There will be real short-term pain in 2-3 years, right? Or 4 years maybe. Will it play out well in the longer term? Absolutely yes. I think the biggest hedge that India has today, to answer your question, is not necessarily just the IT stocks, because the biggest hedge in my opinion is the GCCs.
Right.
The biggest beneficiary of the super cycle this time might be the GCCs. They have about 2.3 million jobs out of the 6 million IT jobs. And they are growing the fastest. They are growing at about 11 to 13% a year, while IT services are actually shrinking. There will be certainly a correlated sell-off that can happen, but after that correlated sell-off, will there be a cost advantage layer playing out? I think certainly yes.
Indian investors can now also participate in IPOs in these AI giants, Anthropic and OpenAI, which are going for IPO very soon. What will be your advice for these investors looking at the whole scenario?
Indian investors today sitting in funds in the US as limited partners as investors, And these funds have gotten into, for example, Anthropic when it was valued at $3, 4, $5 billion, right?
Okay.
So already there are people, even in India, not retail but ultra HNI, sitting in these companies at these valuations.
Right.
Right? So the question is, should I go now? Unlikely, right? Should I buy IPO? I wouldn't buy.
Okay.
But at least I would say wait for the lockup to end.
Right. So that was Mr. Vineet Vijayaraghavan who was telling that AI bubble could be real, and we have reasons to worry, and it could probably have a lot of impact on not just financial markets. It will also affect hiring, real estate. It will also affect the IT companies and the GCCs. So there are a lot of things to be worried about. Thank you for joining me on this show.
Thank you. Thanks, Sangeeta.